Nvidia just released their latest quarterly figures. They're also done with the earnings call, which, to be honest, I mean, maybe I should sell a share of a semiconductor company, buy a couple of microphones and send them their way, because it's truly horrendous. Every time they say something important, suddenly the audio gets cut. It's every single time the same thing. A company worth over $3 trillion can't invest a little bit in decent microphones. It just doesn't make sense to me. Anyways, good quarter, good call as well, good commentary. We're going to talk about all of that in this video. And of course, tomorrow, Thursday, 12:30 p.m. Eastern, as always, during the live stream with Jose as well. So I appreciate all the support. If you're new here, hit the subscribe button. We're trying to reach 90 and then 100,000 subscribers before May 11th. You might ask why May 11th, because that's my birthday, turned 31. So that would be a huge achievement. And if you want to support me even further, do check out the link down in the description and in the pinned comment. Get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with the beats and the misses. So revenue beat, data center revenue beat as well. Gaming did miss for the quarter, a miss of 15.7%. Professional visualization beat, automotive big beat here. I like big beats and I cannot lie. I have to do a t-shirt, I think. I think this will be my next t-shirt for the shop. Automotive is a beat of 24.2%. OEM and other a beat of 31.6%, but that's relatively small. On the automotive side of things, they did comment on that during the earnings call, which is quite good. Gross profit a beat of 2.8%. Gross margin a miss, 5 basis points. Okay, not that big of a miss, but if you look at Q1 guidance, gross margin 71%. That's a miss of 114 basis points. And then operating margin, a miss of 81 basis points. But if you look at the quarter, EPS beat by 5.5%. Free cash flow did miss by 19%. They talked about that. They talk about, well, the fact that they're investing a lot in manufacturing because you want to scale up much quicker because there is just so much demand. And so what do we see? Well, as predicted, if we look at the quarter over quarter growth here for data center, we went up $4 billion almost each and every time. And this time we went up a little bit more than that. If we look at overall revenue, $39.33 billion, that's also up a bit more than $4 billion. And by the way, for the next quarter, revenue is $43 billion. Consensus figures at the moment, 42.26. Of course, that can change in the next couple of months. Now, looking at the growth rates, and this on a GAAP basis, I mean, this is truly incredible. I keep saying the same thing. This is a $3 trillion company that is growing as if this is a $1 billion company. Revenue up 12% quarter over quarter and 78% year over year. Net income up 14% quarter over quarter and 80% year over year. I mean, this is incredible. Du jamais vu, as they say in French, or as we say in French. This is, yeah, I'm speechless, and yet I'll continue to talk. So maybe I'm not speechless. I'm full of jokes today. I had a 3-hour nap. I don't know if you can call it a nap, but I was just super tired. Anyways, for the full year, revenue up 114%. 114%. So they went from $60.92 billion to $130.4 billion in 12 months. This is crazy. Operating income up 147%. Net income about the same. Diluted earnings per share also up 147%. Now, with regards to data center specifically, they said the following. Data center revenue for the fourth quarter was a record, up 93% from a year ago and up 16% sequentially. The strong year-on-year and sequential growth was driven by demand for accelerated computing platform used for LLMs, recommendation engines, and Gen AI applications. We delivered $11 billion of Blackwell architecture revenue in the fourth quarter of fiscal 2025, the fastest product ramp in our company's history. This is incredible. I mean, last quarter, they already told us that they expect to ship more Blackwell than previously expected, but this is already quite nuts. $11 billion already in revenue. Blackwell sales were led by large cloud service providers, which represented approximately 50% of our data center revenue. They also continued by saying data center compute revenue was $32.6 billion, up 116% from a year ago and up 18% sequentially, driven by demand for our Blackwell computing platform and sequential growth from our H200 offering. And here we can see free cash flow, as I mentioned at the start of this video. So they went from $26.94 billion to over $60 billion in 12 months. For this quarter, free cash flow, of course, as we've seen, is a bit lower, $15.51 billion. But yeah, all in all, this is incredible, and it's expected to continue to grow quite rapidly. I think when we did our overview video, I think the expected figure for fiscal 27 is $120 billion. So another doubling in free cash flow in the next 2 fiscal years. So yeah, this is still growing quite rapidly. And so zooming out a little bit and looking at the different segments, their growth rates since that first big quarter after the ChatGPT moment, because I didn't want to look at the other ones because obviously data center was much smaller there. So July quarter of 2023 is when we started to see a huge increase. And since then, if we look at the compound annual growth rate for data center, gaming, and professional visualizations, and also automotive, we see that data center grew at a compound annual growth rate of 127%, gaming 1.5%, professional visualization 21.9%, and automotive 71.3% on a compound annual growth rate, not since then much more. Then looking at, well, where they generate revenue, and here of course there is a focus on this color right here, the purple color, because that's Singapore revenue, and you can clearly see that, well, since that quarter, Singapore revenue is up the most, right? It has grown by 507% since that quarter, or at a CAGR of 230.3%. The next big location, of course, is the United States, that has grown at a CAGR of 120%. Then we've got China, including Hong Kong, grew at a CAGR of 59.3%. And then we have Taiwan, 51.3%. All of this can be found, of course, I've been using this for quite a while, but I can now announce that I have reached a partnership with FinChat. So I have a link down in the description as well. You've seen my videos before. I've been using these services, so now I'm happily partnering up with them. It's another way for you to support the channel. You get a discount as well. This video specifically is not sponsored, but in the future, some of the videos will, and of course, there'll be a disclaimer, etc., etc. If you find these things helpful, of course, try and use the code. If not, that's fine as well. And so, a couple of comments from the earnings call. So first up, Grace Blackwell, demand is high. They will need to scale faster to meet demand. And then they went on talking about inference. So they say here that Blackwell was architecture for reasoning AI inference. So the focus, of course, is still, as always, on training, but they clearly made a move towards inference, which, to be honest, might be also very good for AMD, because AMD has made that move previously. Well, maybe because, well, they knew that this was inevitable. But this is always good to hear. They say that long-thinking reasoning AI can require 100x more compute per task compared to one-shot inferences. So again, it's not a winner-takes-all market, although Nvidia does dominate the market by quite a lot. This is a market that is growing, so Nvidia will continue to grow, the market will continue to grow. AMD, being the number 2 player, in my opinion, will continue to grow as well, even if it's just a small piece of the overall pie. As for the gross margins, low 70s, they are focusing on manufacturing, but should get back to mid 70s later this year. They said that Nvidia automotive vertical revenue is expected to grow to around $5 billion this fiscal year. They also say that the majority, if not all, of the AV robotics players right now are building on top of the Nvidia platform. This goes into also the next comment that was made during the earnings call on custom chips. So they said the following: just because a chip is designed does not mean it will be deployed. Basically taking a shot at all the big tech companies trying to, well, design their own chips and deploying them at scale. He says it's all about building the software ecosystem. And of course, Nvidia has that software ecosystem. Nvidia has that huge developer base, and that's how they will keep on winning. I mean, we know this. We know that every big tech player is focusing on custom chips for internal workloads. That's also why they are still ordering a ton from Nvidia. You can do both. And then the last thing here, they said CSPs are 50% of Nvidia's business, but as we've seen before, this was more focused on the data center side of things. And so right now, if we look at the stock, well, to be honest, not much has changed, right? We ended the day at $131. Now after hours sits at $130. It was up at one point, but yeah, so far no moves, which I'm very surprised. I'm very surprised to see this basically flat after hours. But okay, we'll see. We'll see what happens when the market opens. I know that Salesforce reported, Snowflake reported as well. I know Snowflake had another great quarter. Stock was up. Salesforce, last time I checked, was down. If you're interested in those videos, those will probably go live. I can't promise you tonight because even though I did take a long nap, I'm still very tired. So it might be for tomorrow before the market opens. Probably first first Snowflake and then Salesforce. So all in all, with Nvidia, good quarter, good comments, which by the way should be very good for a player like Micron, because you know that they're using Micron's memory for their huge GPUs for Blackwell and all of that. So that's positive. And then the comments on DeepSeek, same comments as we've been hearing before. It is a positive thing. Now, you might say, of course, he has to say that, but I mean, the numbers speak for themselves. So I don't think he's lying here. I think we're going to continue to see that AI wave go up. Might be some corrections here and there, as we've seen the last couple of days, which are always fine. But all in all, very good quarter. The momentum still continues. I don't think there is a bubble that's about to pop, especially not with the high quality names. That's for sure. So all in all, that's about it. Of course, do share your thoughts down in the comment section below. Like, subscribe, all of that, and I see you all in the next one. Bye-bye.